Hey everybody, I'm going to do a screen record today because we're going to talk about recession and housing bubbles and what that means for real estate investors. We're going to look at facts. We're going to be as non-judgmental as possible, but at the end, of course, I'm going to share my opinion because ultimately that's going to help all of us when we can define the direction we're going. My name is Lyle with DFW. TOP stands for Design for Winners to Optimize Profitability. Hopefully you're here because you want to optimize your profitability. And if you haven't subscribed yet, make sure you subscribe and click on the little bell icon so you can keep up with these videos. We're going to have lots of interesting stuff coming up soon. Let's talk about recession. What is the definition of a recession? Number one, it's a period of temporary economic decline during which the trade industrial activity are reduced, generally identified by a fall in the GDP 2 consecutive quarters. Now, GDP stands for gross domestic product. And what I did is I went to the actual US GDP website. And what it shows us here is first quarter is down 1.6%. Second quarter is down 0.9%. That's 2 consecutive quarters. Now, they're not huge gaps. If these were 10 or 20 or 12%, then we might be concerned, but they're so small, we got to be careful not to be reactive to that. Okay, one of my mentors recently told me, don't live in fear, live in bravery. As a real estate investor, you're used to taking a little bit of a risk, but make sure it's a mitigated risk or an intelligent risk. Make sure you're doing your due diligence, you're doing the research. All markets in the real estate world are doing pretty well right now. You don't want to buy right now and think, oh my gosh, I'm going to buy and it's going to be overpriced. Well, we're going to look at that in just a second. Okay, so are we in a recession? Maybe a little bit based on these numbers, but is it a significant number? No, it's not. It's not like this where you have huge gaps. Tiny gaps, not big gaps. And look at this. I want to show you something up here. Look at this little orange thing on the top here right above my head. The quarter 2 on 2020 is really low, and then quarter 3 on 2020 is really high. See how they balanced out? They have a balance out effect. Well, look what happened in quarter 4 of 2021 is a huge gap, right? And then it balanced, it's got 2 small gaps. So we got to pay attention. What's going to happen next? Is it going to balance back out? Or is it going to go down again? If it goes down again and we see a larger gap, then yes, that triggers a recession and people are not going to be spending money. But the key with a recession is, are people spending money? Let's look at the stats. And I'm pulling these from North Texas Real Estate Information System. I'm in the Dallas area, so they cover all of the North Texas area. And I pull the market report. Let's go up here to the top. And so what has happened is 10% change in closed sales. Okay, so what that means is that 10% less houses closed this month than last month. Okay, change in inventory is 44%. So 44% more houses came on the market. 44% houses came on the market and 10% less houses closed. What's that tell us? That tells us there's a lot of houses out there and they're starting to slow down on selling. Okay, now this is the summertime. Summertime usually sells well. Now this is June and you say we're recording this in July because July stats, we're recording this in August, but July stats haven't been released yet because they're still running the numbers for those stats. So just letting you know that ahead of time. But also look at this middle thing right above my head here. It says change in median sales price, 18.2%. So there's a lot more houses coming on the market. They're selling slightly higher, but less people are buying. That's going to shift to what we call a buyer's market instead of a seller's market. That means our prices are going to level back off. They're not going to be those high price that we're looking at. That doesn't mean it's not going to happen all the time. Excuse me one second. Throw it there. Sorry about that. Okay, so listings are up, but look at this. Also what happened. Mortgages, we just saw the Fed put out a 0.75 increase in mortgages. That means that it's going to take more money to pay for a house. So the house price is going up now, and now it's going to take more money to go to the house. That means less people can afford that house, right? Let's look at the numbers. This right here is called the Housing Affordability Index. By the way, find your local area, find your local market, and pull these stats. You can pull them from a lot of different places. You'll have to see what works for yours. Housing Affordability Index means how likely can somebody afford a house. So 100%, 100 means that that the average person working can afford the average house, right? 120 means that most everybody can afford, but if you go below 100, that means less people can afford the house because they don't have enough, they're not making enough money to afford to pay for that house. And this I believe was 80. Yeah, it's 81. And now it's down to 77. That means less people can afford the houses because the house prices are going up. Look here, 18.2%. So if the house prices are going up and less people can afford those houses, what's that going to do for the market? That means less people are going to be able to purchase. That means less money is going to go into the market. Are people still spending money? Yes. Amazon is getting tons of money. Are prices going up? Yes. Those do not dictate a recession. Okay? So keep those kind of things in mind. Now I'm going to talk real quickly about a housing shortage. They're talking about this, and you'd have to go look at this. This is econofact.org. I like fact sites. But what's happening is, look at this price of construction materials. So they're saying right now people are building less houses. So there's a lot more houses coming on the market, but they're building less houses for the long term. So in the short term, there's more houses on the market, but in the long term, there's not enough houses to cover everybody. So we got to be looking at the real estate market in short term and long term stats so we understand what's happening. We can make an intelligent decision. So for me, I'm still not afraid to buy, even a little bit higher price, because rates are still going to go up and it's still going to be a good day to do real estate. So real estate investing, there's an old saying, when's the best time to plant a tree? Well, last year is the best time to plant a tree, so you can be eating its fruit today, right? But if not then, today is the best time. So as a real estate investor, don't worry about what's happening right now. Look at it long term. Hopefully your real estate investing business is looking at things long term, not just short term. So my name is Lyle. Hopefully this helps you out a little bit as we look at some stats. Don't be overreactive. Don't deal with fear. Don't embrace fear. Embrace bravery and intelligence. Look at the facts and make a good decision for yourself and your business. Make sure you subscribe if you haven't done so, and I look forward to seeing you on some of our other videos. Have a great day. Bye.